Real estate is of constant interest in the GTA. It's of constant interest in any community, really, because people buy and sell and set up homes and move away from homes to set up new homes elsewhere. But in the GTA, it's particularly interesting because week by week, you just can't believe the prices. And you wonder, how long can this go on? Who can afford these particular homes, et cetera? And just received a press release. Supply dynamics are impacting GTA home prices and shaping the market. And to talk about this, two of the individuals who have put the information together, Jason Mercer, Toronto Real Estate Board's Director of Market Analysis. Good morning.
Good morning.
And Steve Deveaux, Chair of Building Industry and Land Development Association, BILD. Good morning, Steve.
Morning, Jerry.
So, I think the thing that comes to mind for most people, Jason, I'll start with you. How long can this incredible increase in prices continue?
Well, I think right now when you look at the sales through TREB's MLS system, and I think also when you look at the new home market as well, I mean, a lot of the price growth that we've seen has been driven by the low-rise side of the market. And a lot of that has to do with continued strong demand on the part of buyers or would-be buyers, yet at the same time we're not seeing a lot of supply. So over the last 10 years, we haven't seen as many low-rise homes like singles, semis, and townhomes being constructed, yet at the same time, we're seeing more and more people moving into the GTA, and a lot of these people are looking to buy one of those types of homes. And so there's been more competition between buyers, and as a result, we're seeing very strong upward pressure on pricing.
Steve, people say, well, there's nowhere to put those houses. We have condos going up, but there are already houses in all the places you could put houses in the GTA.
It's a fair point. If you look at what's happened over the last 10 years, we've consistently sold somewhere between 26 and 30,000 new homes, high-rise and low-rise, consistently every year. 10 years ago, 43% of those homes were high-rise homes. Today, 81% of those homes are high-rise homes. So we're consistently selling the same number of homes that are sort of matching up with household formation of the 80 to 100,000 immigrants coming to the GTA every year. But as a direct reaction to public policy and growth restrictions on land and the inability to get land serviced, we're seeing that shift away from the low-rise home to the high-rise home.
Well, one of the things that I found really dramatic in the information you sent out, the average price of a detached home in the GTA is now $962,312. That's the whole GTA. Inside, sort of tighter into Toronto, of course, it's much higher than that. And you're saying that, in fact, it was you, Steve, who is quoted here saying that if you put 20% down, you'd have to have an income of $174,854. Let's just be clear here. You'd also have to have almost $200,000 available to get 20% down. And if you can't do 20% down, you have to earn even more than that. Are incomes that high in the GTA?
Well, I think the majority of people that are buying into that type of home at the high end of the market are probably not your first-time home buyer. They're people that are already into the market, into a smaller home, have some equity built in, and taking advantage of some of the price growth of the existing home. But you're absolutely right. It is a significant issue. And the new housing sector, what we're doing is we're constantly trying to find ways to provide affordable housing to the market, whether it's in the form of smaller townhouses, stacked townhouses, and you've seen even a drop in the size of the apartment condominiums that are being built. And that's to try and bring the price point of that home down into an affordable sort of home ownership category. People still want, by and large, people still want to walk up a couple steps to their front door and have a bit of a backyard, and we're trying to deliver it to them.
Okay, so Jason, as a person doing market analysis for the Toronto Real Estate Board, let's suppose I've just moved to Toronto and I meet you and we're having a cup of coffee and I say, look, I've got basically an average income, or maybe a little below average income, and I got maybe $20,000 in the bank. Have I got any chance at all?
Well, I think, if you look into Steve's point, not everyone's moving into that say single detached home right off the bat. I mean, and there are a diversity of home types available from, condominium apartments right up to that single detached product. And again, I mean, as we've seen, new and more innovative products coming online, certainly, that has helped. But I mean, on top of what you're talking about too, in terms of, just sort of putting down a down payment and carrying that mortgage over time, another issue is that, buyers are faced with substantial upfront costs, especially in the city of Toronto. Toronto right now, where we have the additional land transfer tax, and then the province of Ontario is seriously considering giving that right to other municipalities, where they'd be able to levy a second tax onto homeowners, and that's paid right up front. That's not something that's amortized over time or what have you. So you have to cover that all off at closing, and that's a substantial impediment. That's money that could go towards a down payment. I think what we need when we're thinking about government policy, looking at the housing market, is more positive policies. Like, for example, the new federal government could look at indexing the home buyers plan, people taking funds out of their RSP to increase their down payment. They could look at indexing that to inflation, and even looking at, say, being able to withdraw, say, twice from that plan in the case where someone's has a significant change in their life, for example.
All right. So I heard on the news on this radio station this morning that interest rates are going to go up in the United States, and therefore maybe even to a greater extent in Canada. Do you think that's the case? And if so, what will that do to us?
Well, certainly the consensus view right now is we could see an increase in borrowing costs as we move through 2016 and into 2017. But I think that is still somewhat of an if right now. I mean, that's sort of been the consensus view over the last couple of years as well, and yet we're still seeing interest rates at or near record lows. But I mean, I think if you think about the average household in the GTA, the average homeowning household, I think sometimes they don't get enough credit that they couldn't account for an increase in borrowing costs. I mean, even during the recession, when times were quite tough and we had seen job losses, I mean, we didn't see the default rate Canada-wide, move above, say, 1%. So I mean,
Okay.
it's still, I think the majority of households are flexible and would be able to account for changes in borrowing costs, whether it was, foregoing other options or looking at different housing options that would fit into their new situation.
Steve, are those condos that we see being built, sprouting up like mushrooms all over the city of Toronto, are they affordable?
Comparatively, I would say yes, they are. The challenge with it, though, is that with a lot of these towers, and you'll see them, they're getting taller and taller every year as the industry is trying to meet provincial policies and local policies of intensification. It's taking, in some cases, 3-4 years from the time someone makes a buying decision for them to move into that apartment unit. So it's very challenging. It's very challenging for the homeowner to look at a scenario that's 3 to 4 years out and make that buying decision. So we continue to struggle to find ways to deliver that home in an efficient way and in an affordable way. But in fact, with the average price of that condominium unit in the GTA now at $440,000, it is becoming the affordable option for people to get into the market.
Jason Mercer is with Toronto Real Estate Board and Steve Deveaux with BILD. Thanks to both of you.
Thanks very much.
Thanks very much.
You willing to go to the mall to see Santa? I mean, let's face it, Santa took time off from making toys at a very busy time of year in order to show up at the mall so your kids can come by and tell them what they want. And so you can get a photo you can drag out when they get married and show it at their wedding and stuff. Or you can say, well, I hope Jimmy's happier about getting married today than he appeared to be when he was with Santa Claus. Stuff like that. Why is Jimmy upset when he's with Santa Claus? Because he stood in line for 2 hours with his family in order to get to the front of the line and get the picture taken. This is a problem for malls. And, Tony Chapman, our marketing and business guru here on the radio station, talks about how he fears that we are driving too much of the retail business online and that we will be sorry someday that we did that we need these brick and mortar stores. It's the character of the community as much as it is the economic generator of the community, the small business. Now, small businesses and big businesses can operate to some degree or exclusively online, no question, and that isn't going to go away. But it is left to businesses to try to figure out, if they have a brick and mortar location, what to do about it. I mean, a mall, I suppose, could just say collectively as a business, we're going to just sell all of our stuff online. We'll shut down the mall itself. Then they're just Amazon at that point. And Amazon does a pretty good job since they seem to be willing to lose money. They're hard to compete with. Did you know Amazon doesn't make money? It doesn't, after all this time and all that stuff that they sell. So they're very difficult to compete with because other people, have this nasty idea that they should turn a profit and be able to pay their own bills. And so it's pretty tough competing with some of the online marketing and retail that takes place. But now what the malls are trying to do, apparently, Globe and Mail writes this up, is make the Santa experience better. So they must still believe that this time of year, Santa is one of the experiences that will draw you away from your home to go to the mall and deal with the crowds. Now, for some people, actually, they want to do that. That being out there in the hustle and the bustle and looking at the Christmas specials and seeing Santa and stopping by the food court is actually something they really want to do. This explains people who line up in the middle of the night in order to get into a big box store this coming Friday. In fact, some of the stores in the United States are going to actually open Thanksgiving evening. I think tomorrow night, some of them are going to open and start doing their Black Friday sales on Thursday evening. Again, they have to draw people in. But would you make an appointment to see Santa? That's what some of the malls are hoping for. Cadillac Fairview Corporation says to wait in line for hours to spend 3 minutes with Santa when there's a 50-50 chance that at the end of the wait, a child is going to be crying when he sits on Santa's lap, it takes away from the experience. Santa in a mall has existed for decades, but it hasn't evolved much. So some of the malls are looking for ways to evolve that experience. One would be that you book an appointment with Santa. He's very busy, kids. Very, very busy. We've got to get in his Outlook. Okay, so if you look at Mommy's smartphone, you'll see that she booked an appointment with Santa Saturday, 2:13:30 p.m. Okay, that's when it is. This is kind of cool, and apparently they're doing it in Vaughan Mills, is they have a digital screen that tells the story, and this is going to answer a question you yourself might have asked. How does Santa get into the houses that don't have chimneys? Back in the day, they all had chimneys, where it was really cold in that house. But they all had chimneys. Now we don't have that. He does it apparently with a magical key. And an elf comes on the digital screen and tells the story of the magical key. Santa presents each family with their own key to remind them of the visit, accompanied by a light show on the ceiling of his house. So that's a little bit more contemporary kind of version. But how much of your shopping are you doing online? We're going to try and help small businesses on Friday, by the way. I'll give you some information on that in a moment. But I can recall, because I've been doing this for a while, and the whole digital age is a fairly new, fast-moving thing, the numbers of times that we did shows where we were trying to convince people that it's actually safe to shop online. And I would hear from people who, in fact, refuse to have a computer because the government taps into that, and that's a line into your house, and they can watch you. So not only would these people not shop online, they just weren't going to even have a computer. So some of the tinfoil hat brigade have disappeared, and now people are shopping online, happy to do it, doing certain percentages of it. I do, but I don't do it exclusively. I'm not a shopper. I don't go just to wander through the stores and see what's there. Well, unless they sell motorcycles. But other than that, I know what I want. I'll go to the store, get it, and leave. But they still can get me in if they convince me they have it. In terms of helping out small business, here's the deal. We've got a couple of experts coming on Friday to help mom and pop shops become chains and household names. A pair of experts who've helped some of Canada's biggest corporations expand their markets. So if you'd like some free advice for your business, your small business, you write me an email, and we'll see if we can fit you in. Jerry.agar@bellmedia.ca. That's Jerry with a J, .agar@bellmedia.ca, and let us know how we can help.